This video is based on the technical analysis of LVMH, which is also known as Moet Hennessey Louis Vuitton. And as you guys know, this particular company is actually listed on the Euronext exchange. And yeah, without wasting any further time, let's get straight into the actual technical analysis. So here we are on the monthly chart, and we can see that in regards to the monthly chart, we are actually in an upward trending market or an upward trajectory. And the question at this point in time becomes, is now a good time to be buying LVMH? And in my very, very humble opinion, I would say no. Why do I say so? That is because at this point in time, in my very humble opinion, the market is oversold. The market is oversold, and as you guys know, when it comes to the actual buying and selling of shares, the name of the game is buy low and sell high, right? And at this point in time, the market is high, right? So what this means is that myself personally, I would love to see the market actually head down to around this level over here before we actually start looking for those potential buying opportunities. Why do I say so? That is because number one, we had an overextended W structure over here, as you guys can see, and it has a neckline at that point. And by now, you guys know that whenever we have these patterns, such as the overextended M structure or rather W structure, we want to see a price violating the neckline to the upside, and then in the future coming back to the neckline to give it a test. And where we have that neckline is generally where we look for those potential buying opportunities, especially if that neckline aligns with any key numbers that we have in regards to the Fibonacci retracement tool, right? And let's utilize the Fibonacci retracement tool just to see if we have any numbers that align with that neckline to get confluence and confirmation in as far as buying at the neckline is concerned. And here we are, guys. We can see that the neckline, which is over here of this overextended W structure, we could say aligns with the 50% Fibonacci retracement level. So what this means is that, as I said, we have confluence and confirmation that indeed, should the market from where it is, right, move further down to around this level, which is where we have the neckline of this overextended W structure, at this point is actually a good place to be looking for those potential buying opportunities. And that is because, as I said, guys, number one, we have the overextended W structure. Number two, we have price violating the neckline to the upside. Number three, if it does happen, we will have the market come back to the neckline to give it a test. And where we have the neckline, we also have a very important level of Fibonacci, which is the 50% Fibonacci retracement level, right? So we have confluence and confirmation that indeed, should the market from where it is come back to this level, at this level is where we should potentially be looking for those buying opportunities. However, having said that, we're not just going to buy, we're going to look for further reasons for why at that level we should indeed be looking for those potential buying opportunities, right? But what else do we see on this chart of LVMH at this point in time? I don't see much really of interest, although I just want to point out that as much as I'm saying that this level is a good level to be looking for those potential buying opportunities, just also bear in mind that we have these candlesticks over here, and they are bearish candlesticks with small bodies and quite long lower wicks. And what they tell us is that at the bottom where those wicks actually end, there's a lot of liquidity there. And as you guys know, liquidity is money that needs to be triggered by the market at one point or another. And we also know that the market will always go to where the money is, right? We have another candlestick over here, right? And there's a lot of money stuck there. So what this tells us is that in the future we will indeed see the market move further down to these levels to grab that liquidity. And that is because liquidity is money, as I said, that needs to be triggered by the market at one point or another, right? Anyway, from here, let's head down to the weekly chart and see what's happening down there. Let's have a look. Weekly chart, just bear with me, guys. Okay, here we are on the weekly chart. And just to recap, remember, guys, on the monthly chart we spoke about how we have this overextended W structure. By the way, it's an overextended W structure because that first leg, which is over here, is much higher than that second leg. And we also said that we have the neckline at this point, and that ideally we would love to see the market actually from where it is move further down to around this level, which is where we have that neckline. And that neckline is also now a very strong level of support, and at that neckline is where we would look for those potential buying opportunities, right? But here we are on the weekly chart. What do we see on the weekly chart? Let's zoom in a bit and see what's happening. On the weekly chart, there's an indication that we may potentially actually see the market move further down to around this level. How so? That is because if you look at this area over here, we can see that we have what seems to be and over. Let me just actually zoom in. Just bear with me, guys. Let me just zoom in a bit. Let's see. Okay, we can see, as I said, that we have what seems to be an overextended M structure, which has a neckline at that point. And it is an overextended M structure because that first leg is much higher than that second leg. And as I said, guys, it has a neckline at that level. And what's happening at this point in time is that we have a situation where the market or price had broken to the bottom side of that neckline and then went back up to test that neckline, right? And guys, as I usually say, whenever we have these M structures, we want to see price breaking to the bottom side of that neckline, heading back to the neckline to give it a test. And generally speaking, where we have that neckline is where we would look for those potential selling opportunities, especially in the case of traders, right? And especially if that neckline actually aligns with any key numbers that we have on the Fibonacci retracement tool, right? So I'm just going to use the Fibonacci retracement tool just to see if that neckline actually aligns with any key numbers that we have on the tool. Just bear with me. Let's have a look. Fibonacci. Just bear with me, guys. And there we go, more or less. And we can see that actually the neckline, which is over here of this overextended M structure, actually aligns with the 61.8% Fibonacci retracement level, right? So what this means is that what's likely going to happen is a lot of traders and investors are going to look for selling opportunities at this point, and many of them are going to sell and hold up until the market probably reaches this level. And at this level again, which is over here, is where they would look for those potential buying opportunities. And that is because, as I've said, guys, remember on the monthly chart we spoke about how we have that huge W structure which has a neckline at that point, and I said to you guys that the neckline actually aligns with the 50% Fibonacci retracement tool, right? So as I said, in my very humble opinion, I would say rather wait for the market to reach this level, and at this level I believe is where we should potentially be looking for those buying opportunities, right? Another thing that I also want to mention is that as much as we have this overextended M structure over here, what normally happens in regards to M structures is that a lot of traders and investors usually sell on the second leg of that M and they place their stop losses just above. So we have a lot of stop losses that are located in and around this area, and as much as I'm saying that the market is heading back up to the neckline of this M structure to give it a test, what may possibly also happen is we may see a situation where the market actually continues to move further up, because at the end of the day there is a lot of money stuck in and around this region over here. I hope what I'm saying makes sense, and peace out everybody.